What is the break-even point units calculation? Well, to begin with, the break-even point, as the name implies, is when you will be even in terms of what you put into something versus what you get out of it. If you qualify that with the units calculation, it asks how many units do you have to sell before your return from selling those units equals your input, that is, your cost for undertaking the operations of manufacturing, production, and sale. Okay, so all that taken together, that's your break-even point. Now, there's a simple formula you can use to calculate the break-even point in units, and this is it. Okay, so first you'd say, what is the price per unit that you're charging? And then you would subtract from that price your variable cost per unit. Okay, that's removing all fixed costs from the scenario, just what it cost incrementally for that unit. Okay, and that will leave over what's generally called your contribution margin. But regardless, this amount, now you take the total fixed cost that go into producing that unit. If you divide that amount by the contribution margin there, it will give you the number of units you need to be at zero or break even, right? Zero profit. Okay, so that's the calculation you can use. Now, a related term is the margin of safety, and that is basically the number of sales you have above your break-even point. Okay, so you could have a unit number there for margin of safety, or you could have the unit number times the contribution margin again, and it would then give you profits above your break-even point. So that's the break-even point, how you calculate it.